Balkrishna Industries has definitely been the cynosure of all eyes yesterday, especially after touching that fresh lifetime high. There's a lot going on for the company, and the street is betting on a host of triggers and fundamental factors that could really propel growth for this one. When you talk about Balkrishna Industries, you think of a very, very niche segment that it operates in. It has a key primary focus on agriculture, construction and industrial vehicles, along with the fact that they have a fair amount of play in mining, in port, in ATVs as well. As far as exports are concerned, they are an established exporter of OHTs, which is off-highway tires, with about 80% of their revenues coming in from exports. They currently have about 4 manufacturing units in the country with an overall capacity of about 300,000 metric tons per annum. As far as the triggers are concerned, there's a lot of factors that the market is betting on as far as the growth opportunity is concerned. Do remember, they have already improved their franchise very significantly. There's a lot of room for growth as far as market share in the global OHT market is concerned, because yes, they have developed a strong franchise, but the fact of the matter is that right now they've been able to grab about only 5% of the global pie. So there's a lot of potential according to analysts there. Let's talk about costs. They have about employee costs of 6% versus 25-30% globally. So there also they have a very strong competitive edge. They have an extensive portfolio. They're supported by very strong R&D capabilities and a presence in about 140 countries worldwide. Key initiatives that the market is watching out for is the backward integration into carbon black facility, revamping of the Valuj plant, capacity expansion for large OTR tires as well. But costs clearly is a big trigger for the company, given the fact that they have a manufacturing base in the country. Balkrishna definitely has an edge over global peers in terms of labor costs, raw materials, logistics, etc. It has also enabled them position their products cheaper than leading brands, while at the same time retaining an 18 to 20% of EBIT margins. After a muted performance in terms of volumes for the last 3 years, market believes that Balkrishna is definitely at the cusp of a cyclical demand upturn, led by primarily a revival in global commodity prices. The commentary from global off-highway OEMs also points to bottoming out of demand down cycle, with potential recovery seen in 2021. So given the competitive positioning, multiple strategic initiatives, sufficient capacity, Balkrishna is poised to benefit from all of these changes and developments, positive developments that are happening. Of course, there are a few risks as well. They have a huge exposure to Europe and America, with 65% revenues coming in there. They are overly exposed to agri segment, which could also in turn expose them to agri commodity down cycles as well. There's some potential threat from anti-dumping duty by target nations as well, and competitors like Michelin and Bridgestone, who are also looking at low-cost production locations to manufacture off-highway tires. But largely, given the kind of trajectory the stock has seen, one would say that the market is clearly focusing on the pluses than the minuses.